Hey everyone, welcome back to CryptoCache. Thank you so much again for joining me here. We're going to talk about specific traps being set here by the market makers and what to identify when those things happen. And more importantly, if we should be taking a long or a short leading into the weekend, because there are some pretty obvious signs to me on the order blocks as well as liquidation that are kind of indicative of a trend reversal and or continuation in the same direction. I'll be able to specify that more specifically here in a moment. But when we look at the Fear and Greed Index and the Altcoin Season Index, those are two very telling signs, especially when we combine that with ETF net inflow, or in this case, outflow. Important stuff we want to pay attention to. Let's take a closer look. All right, folks, before we get started here, I just want to preface and let you know that we're going to be taking a look at lower timeframes today, kind of leading into the weekend to get that weekly snapshot of what's going on so we understand more specifically the direction we're going to be heading. Now, obviously, we're in a descending trend. We have a macro structure that's breaking bearish but hasn't fully done so yet. So we want to be kind of mindful that we're in this transition right now. And oftentimes, transitions are the worst things to trade, okay? Because you don't truly know which direction we're going to head. Because obviously, breakout traders will be super successful or super terrible. Elliott wave or idiot wave theorists are going to be, telling you that they told you so because they give you 50 different scenarios. So there's a lot of things we want to pay attention to here today, but try not to be an emotional idiot. That's probably the best way to describe it, because when these things happen, these transitions occur, sitting on the sidelines, honestly, is probably one of the best things you can do. I know it's difficult to do because crypto traders are just like addicted to trading, but for the most part, pump the brakes. It's all good. Okay, we're going to be just fine. All right, so let's take a look at what you were thinking here with our some polls here. Well, we've got 27 votes in the last 30 minutes on YouTube, and we can see a majority think we're going to go under 107K. I don't think we're going to see that immediately, but it's still on the docket, right? Still a possibility, as we discussed previously, hitting that 108K range. That's already happened, right? So obviously, there's potential for further downside. We want to be mindful of that. When we look here over at Crypto Twitter, we can see 12 votes. Not a single person thinks we're going to go down below 107K. Crypto Twitter is fairly well bullish, right? Now, this is only 12 votes based in the last 30 minutes, so it's a limited demographic, but majority of folks are bullish on Twitter and bearish on YouTube. I trust Twitter over YouTube as far as Bitcoin price action, just based on the simple fact that, well, there's too many idiots creating videos like these. I could be one of them, honestly. Really, just do your due diligence, watch my video all the way through and make sure, but I can tell you that majority of folks that are trading right now, specifically those who are crypto YouTubers, they're going to be kind of doing what everyone else is doing and basically just regurgitating the same crap. So what I try to do is keep things fresh and make sure we do things different. And by that, I like to look at back-end data too, right? So let's quickly identify this here really quick. This is nothing super substantial, but it's a pretty big number. 111,600 is that significant area of sell pressure. In other words, we have a lot of selling that may occur if we get to that level, okay? So it's just a really big order block at a specific area there that's well above the price action. So we return back to that 111.5. There's a decent chance we're going to start seeing some selling pressure. And that speaks to and or reiterates the resistance between 111 and 112 we discussed yesterday. So I think there's some synonymous behavior there, and those of them, whoever they are, they're not watching these videos, but whoever they are that has billions of dollars, they're the ones wanting to sell at that area. At least for the moment, we have a lot of value there. Now, when we take a look here at the last 7 days, this tells us there's more liquidation closer to the downside. So I'd be willing to guess that those longs at 109K are probably subject to liquidation today. If we look at the daily time frame, we can recognize the same thing here as well. Similar behavior. 109,000 is that rough estimate of that local bottom based on liquidation. Okay. We look at the last 30 days. We are seeing this starting to taper off, of course, because more macro liquidation levels got hit yesterday and the day before. So in this case here right now, it's probably best to anticipate a short-term correction lower, but potential shift in momentum higher. And I'll discuss more about that here in a moment. And we take a look here at total liquidations. The easy way to understand this is that obviously in the last 24 hours, we've seen a lot more liquidations than we have in the last 12, basically implying that we saw a lot more longs getting destroyed yesterday than we have so far today. Even with this short-term continuation higher, you can see that reflected as well with the short positions too. There's it's like a 1.2, 1.3 to 1 ratio for that. And that's not super telling, but it does help us understand that there's some liquidation that could occur here soon, or it may have already happened. And what I mean by that is when we look at our liquidation levels, we'll be able to identify those key areas. And what the liquidation delta is telling us is more likely we're still bearish. And we're going to need a tremendous amount of money flowing into Bitcoin and altcoins, of course, too, to be able to get those short squeezes. So it's inherently more risky in times like these to take a long than it is to consider a short, especially when we're testing a descending trend line. All that being said, fear and greed index is still low. That's generally a time to buy as far as spot bags are concerned, right? So hypothetically, averaging in between now and 100,000, if that were to happen, wouldn't be a bad idea or consideration, just based on the way that fear works out. The more fear in the market, the lower the price, and inevitably the more likely it is to bounce and continue higher. All that said, altcoin season index, pretty straightforward here, but we can recognize that altcoin season index is still right there at that 1.5 trillion mark. In fact, we're exactly at that level today. So it's really just kind of our support level for altcoins, letting us know that the bottom is, I wouldn't say in per se, but that there's less propensity for significant downside in these altcoins because the dips are being bought, especially with, I would have expected a much lower market cap after what had happened here recently. It turns out that even though altcoins got hit fairly hard, they've recovered quite nicely and bottomed out in their local ranges. Okay, and that's a good sign. Furthermore, too, ETF net outflow. Generally speaking, we see 2 or 3 days of outflow followed by some inflow in most cases. In other words, you generally only see large outflows last for 1 or 2 days. So at this point, hypothetically, we could see a slow continuation higher. ETF inflow and outflow doesn't necessarily reflect the price of Bitcoin, but it does kind of let us know that we're in a position where the price action should and could very well be bottoming out. Okay, so let's take a look here at the back end liquidation data, just kind of recognize some stuff here, because when we look at these kind of situations, we've already identified yesterday the macro structure. We hit a lot of, we swept a lot of liquidation. We've blasted straight through a lot of support levels. They're now resistances, 111, 112K range. And we look here as well, we can see open interest right there between 111 and 112. So that's just kind of that perfect example of resistance level locally. We can also recognize too that liquidation delta is at 15 billion. That's still a lot to the downside, basically telling us there's more shorts, $15 billion worth in shorts more than longs. Keep in mind that's including leverage, and leverage is amplified. That's not actually a true 15 billion. That's just a 15 billion in value of how the scale works. So hypothetically, that's, $1 billion worth of 15x leverage. All right. All that said, though, 112,000 to 114 is kind of that local range here that we could actually see get hit next based on this overall trend, right? And specifically liquidation letting us know that we have a lot of propensity for further upside. Okay. Now, what I mean by that is that only will happen if liquidation delta dissipates. Okay, we're going to need to see some massive, a significant amount of money flowing into Bitcoin to see that. Now, this is a weekend coming up here soon. So do you really think we're going to see a lot of volume this weekend? No, definitely not. Weekends are notoriously low on volume. So I think the odds of seeing a pump from Bitcoin this weekend is low. What we want to identify here is to see if there's any altcoins that are running better or parallel with Bitcoin and kind of what their pairing is, and that's how we're going to be able to identify some outliers there. If you don't want to consider trading Bitcoin, but me personally, a Bitcoin short at 111,000, which that ship may have already sailed, is a decent consideration. Now we take a look here at the daily time frame, 111,000. Once more, that point of control. There's nothing here in the daily telling us that we're in good shape by any stretch. We're still diverging on the MACD, and of course we lost 50 on the RSI a few days ago. So we're really in a position where we want to presume that the price can continue lower until it doesn't. That's the best strategy. Now look at the 4 hour. This is something that's important to recognize. Again, I like to draw my trend lines out not just with candle wicks there, more consistency, but generally speaking with moving average. So the 20-day SMA kind of letting us know that we're still under that trend. So the trend right now is down, right? So all the more reason why taking a long position is inherently more risky. Now, doesn't mean you can't still take a long, because longs are beneficial in some cases because they are inherently less risky. But also, when there's overextended states that occur, like we saw recently, buying some of these dips isn't a bad idea. Okay, so obviously there's certain ways you can strategize to do that, but from an outside looking in, bird's eye view, Bitcoin doesn't have any really firm indication that it's going to go higher. What we want to see is the descending trend line break and 111,000 become the new bottom. Until that happens, I think it's probably best to be maybe wait on the sidelines for the price action to kind of calm down. We do have some benefit here, though. Keep in mind, for the last, this is ever since like the middle of October, roughly 2 weeks worth of trading. In the last 2 weeks worth of trading, we've seen the most amount of volume at 108,000. So the price has come back down to 108K. That may be a decent consideration to take a long, albeit high risk long, because there's a lot of open interest and basically support at that level. There's a lot of volume there, letting us know that people are interested in buying that 108K range right now. Okay, that's kind of the concept. So you can find some success there, but from a momentum standpoint, everything here outside of the MACD trying to converge, but truly hasn't yet, there's not a lot of reasons to consider a long. If you do take a long, it's considered to be a high risk, and you want to just make sure to watch it close. It's kind of the concept. But I'm going to still be leaning a little bit more towards some shorts overall on the weekend, just based on how things are performing right now. I'm willing to guess most altcoins are underperforming versus Bitcoin right now, and we'll take a look at that next. All right, folks, so take a quick look here at Ethereum first and kind of get a baseline of where we're at, because when we look at the backend data here from yesterday, that 3,900, 3,950 was a solid resistance range for us based on open interest. We can see that's still the case. I mean, nothing really has much changed in the last 24 hours, just kind of reaffirming 3,900 as the tentative resistance force for ETH, right? When we take a look at liquidation delta, still at 15 and almost 17 billion, higher than Bitcoin at this point. So there's more people shorting with higher leverage effectively, or more leverage on Ethereum itself, which is generally unfavorable when if you're considering trying to take a long, in spite of Bitcoin pulling back, right? It's never a good idea. So at this point here, 4,000 is the heaviest area of liquidation above the price. Not a lot left below. This is the last 7 days, keep in mind. So if we zoom in a little bit closer, we can probably see his last 3 days worth of trading. There is some liquidation down below about 3,800 and 3,700 respectively. So nothing super outrageous here for Ethereum, kind of the normal stuff there. Honestly, there's not much that has changed here since yesterday. We're trying to converge on the MACD that's very similar to Bitcoin. And we're also seeing the money flow index slowly increase and kind of pivoted off that 20 level, that overextension. So this normal thing that we're seeing right now is a dead cat bounce, where the price action's just kind of recovering towards its trend line. Until we close above the trend line and or just say 4,000 or higher is really not a great call to consider trading this coin. Keep in mind too, 3,930 is that heaviest area of volume from our previous consolidation range here before we took off. So it leads me to believe that we're going to see another rejection if the price continues a bit higher at this 39 to 3930 range. Okay, so that's kind of the easiest way to understand Ethereum right now. Not necessarily a good call. I don't think you should consider shorting just yet either. This is tentatively the bottom as well, so it's inherently more risky at this point to do either trades. Honestly, a little less risky to short than it is to take a long, but I don't really like shorting these kind of ranges, especially after Bitcoin initially rejects off its descending trend line. We need a little bit more time to evolve here to be able to see and identify what's going to happen next. So careful you don't force any trades here today. I don't think it's a good call. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, let's move on to Solana. And we could probably summarize with the same thing here as well. In fact, we're going to take a quick comparative analysis in this coin, because I was originally talking about 190, 195 being a good area to consider shorting. We came super close to hitting that range, and the price turned around for Bitcoin. So as you can tell, most altcoins are performing very poorly versus Bitcoin. But when we look at the backend data here for Solana, nothing much has changed. 190, 195 is that area of open interest. Liquidation is roughly there at about 5 billion to the downside, still very high. And then we also have some liquidation on the upside, but that means very little at this point because it's not only so far away, but it's above that point of control, that resistance range for Solana. So until we get closer to that range, we want to presume that doesn't really matter too much. And the important thing right now is getting above this trend line and or closing above 190. I think that would be a good indication. Just keep in mind, if you see that happen over the weekend, it may not be very trustworthy, considering low volume pumps on the weekend have a tendency of dumping on Sundays. Okay, so just some friendly advice there. Be very careful trading this weekend. Take a look at SUI here, double checking a few important stuff, or factors rather. This coin has a significant amount of resistance at 250 and 245. That's the macro resistance range at 245. Was supposed to be a support in the past, consolidating well in that range and then lost the bottom. But generally speaking, 245 to 250 is that resistance for us. We can see 300 million in short liquidation delta, implying it's not a good idea to take a long just yet. This coin may be worth a coin flip though, just based on the simple fact that it has a propensity to recover fast. But that's not a reason to take a trade, right? Again, I said coin flip. If you're a gambling type, then you may actually see this coin increase. Now, I only say that because this coin has a propensity to 2x Bitcoin to the upside. But Bitcoin is it's still stuck on stupid. So there's no way to really recommend considering a trade with this coin. Hypothetically, we see 220 again. That may be a decent consideration. But between now and then, it's just too high of a risk. We're still in a descending trend line or underneath that We're under all moving averages. 4-hour time frame is terrible, just as it is with the other coins we've looked at so far. And there's really no reason to consider trading this coin. So again, I'm not trying to be a bummer here. I'm just kind of letting you know straightforward here that if you're forcing a trade today, you're probably doing it wrong. While there might be some outliers that are still worth trading, these coins here so far we looked at, there's nothing like super indicative we're going to see a reversal. Okay. And if it's your favorite coin, or perhaps you're an Elliott wave theorist and you think that, one of the 50 different scenarios that are given to you are viable, then that's a different story altogether. Obviously, use proper risk tolerance and make sure that you continue to follow or go down that rabbit hole. But between now and then, or whatever the case is here, we can see that there's so much resistance above us, specifically 250 to 245, that until we close above that range, we really have no right taking a long position. If you do insist on taking a long, ensure you secure profits between 245 and 250. That's an obvious rejection zone here for this coin. All right, moving on to XRP. Now, this coin is interesting because it has a lot of signs here of a head and shoulders pattern, right? And that's, once more, not a guarantee. It just increases the odds of it playing out. And albeit, outside of this here, this coin is one of the few coins that's doing well today too. So we want to double check that too. So we're actually going to compare this one first, just kind of see where we're at and double check a few things here. And if we look at the continuation higher, I guess it's not that much better. It's just like 2x of Bitcoin. In other words, we saw from bottom to top here so far, XRP, 7% correction. And from bottom to top for Bitcoin, 4.5%. Okay, so that's almost a 2-to-1 ratio there to the upside. And if we kind of do the same thing to the downside here, we look, this most recent correction was a 2% correction, and XRP pulled back by approximately 2% as well. Okay, so it basically implies it's going to go up twice as fast as Bitcoin and pull back only 1x of Bitcoin. Okay, so those are usually coins you want to consider investing in, more so in the short term for continuations higher. So I'm not proposing you take along with this coin, but at this point with the comparative analysis, just quick comparison, there's a decent chance that XRP is more likely to respond better to these pullbacks and recover faster than these other coins we looked at. When we look at our point of control here, 250 is that solid area of support. So at this point, 250, closing above 250 today, should indicate further upside for this coin. Same thing as well with liquidation delta. It's pretty high at 1.5 billion. That's actually a lot for this coin. But for the most part, that can be a false positive, especially since we have a lot more liquidation above the price. I'm not proposing we're going to see 270, 275, but that is once again that heavy amount of resistance here for us in this coin. So I think we have more propensity for this coin to go higher, even though there is an a head and shoulders pattern here, which could indicate further downside. Now, to keep this in mind here, when it comes to head and shoulders patterns, if you're not familiar with how they work and why they are a pattern, it's because we see a retest here of this local high that was previously held as a resistance, okay? Now you're probably wondering, wait a minute, how does it go up and down like this, and why does that happen too? Well, it goes higher because the bears eventually give way. But what inevitably happens is this next wave here essentially pulls back hard enough to pivot off the local low, and then it continues into this pattern. So we're kind of in this little unique holding pattern between 235 and 255, and generally breaking above or below will break out. The long story short of this is that head and shoulder patterns, while they have a higher success rate, there's a momentum and a lot of things you want to pay attention to as well when you trade these coins. So to me, when I look at this here, I like to see that we have confirming factors. Now, this isn't super extraordinary here. It is better with stochastic swinging up a little bit higher, MACD is converging a little bit more, and we're seeing a better position here where the price action is looking just slightly better on the lower time frames. The daily time frame, we do got to recognize from a macro structure, 270, 275 is a heavy resistance for us. So when I see everything kind of combined together here, the macro here, we have more volume, more money flowing into this coin than out of this coin. Okay, other coins don't really say that on the larger time frames. So, well, okay, Ethereum is one of those, but for the most part, we're seeing a significantly better combination of price action for this coin versus Bitcoin, in addition to money flowing into the price. Okay, so that really helps us in overall just kind of make a slightly more informed decision. So the easy way to understand what I'm trying to say here is that this coin looks slightly better than most everything else we've looked at so far today, and it may be worth considering a long, even though it's once again higher risk long because we're traveling or trending into not only the descending trend, but some moving averages. There's a lot of resistance above us, okay? But if you're going to consider long, the recommendation is to consider securing profits between now and the local point of control at 262, as well as a macro point of control there of roughly 270, 275. That's that macro resistance for us. Okay, so heaven forbid you consider a long. I would recommend considering a tighter long. Don't get super greedy on this one here. Bitcoin bottoms out. I think XRP will continue. That's what it's proven to do so far. So that's kind of where we're at there for XRP. That's actually the only coin here so far today that looks pretty decent. All right, those are my thoughts. What are yours? Why don't you comment below? Let me know. Do not forget to take advantage of this offer here through Bitunix between now and November 22nd. Highly recommend it. Awesome exchange. You get a good $700 deposit reward bonus, as well as $8,000 futures bonus and 2 Ethereum if you were to just basically trade with the exchange. Simple as that. So check it out. Links down below for that. If you have any questions, feel free to reach out. Look forward to seeing you next one. Have a great rest of your day. Take care.